Hello Wolfpack, it wouldn't surprise me if Bitcoin moves up to 45.5k or even 48k. However, I don't think we're going to be seeing a full recovery past 53k at this point in the market. I think that the trend is still downwards, and I think that the small upwards move we've had over the past few days is mostly a dead cat bounce and possibly even a short-term fake out to get bulls back in the market so we can actually drop lower. I'm not seeing the strength that a lot of people are seeing right now. I think that basically a lot of our options have been exhausted. We've just seen a bullish MACD cross on Bitcoin, which is good to see. We've seen a double bottom on the RSI. We've just jumped over the 9 EMA, and for these reasons, I think that there is the potential within the next few days that we may be retesting 45.5k, which for those of you who don't know is this resistance line here that I'm going to make thicker so you can see it. Right, and you can see that's a very prominent resistance line. That's where we formed that, or tried to form a double bottom there, but we ultimately dropped below it. And so coming back up and testing that from the downside and then rejecting is a possibility, or even jumping above it briefly, right, and then rejecting from 48k, or jumping above it and actually rejecting from 53k. In either of those scenarios, we'll still be bearish on Bitcoin. We'll still be forming a head and shoulders pattern. We'll still be forming a dead cat bounce, and we'll still be below all of our critical indicators. And so unless we get over 53k, Bitcoin is bearish, and it's in a bear market on a technical level. And don't mistake what a bear market is. A bear market doesn't mean we need to go down for 3 years. A bear market just means we've extended to the downside below all of our critical dynamic support zones, which is our bull market support band, our 50-day, our 200-day, our 50-week, not our 200-week yet, but we usually bottom out at the 200-week. We've corrected 44% from all-time highs. To say it's not a bear market, you'd be slightly deluded, or you wouldn't really understand the concept of what a bear market actually is, because even in July here, right, that was technically a bear market. I think the people in cryptocurrency market, and I was in the stock market before I was in crypto, so I think I understand this a little bit better. People in crypto tend to not really understand what a bear market actually is. I think crypto bear markets conventionally are different to stock market or stock bear markets, is because people only think of a bear market as when something is down 90% and just trending downwards for 3 years. It's not necessarily the case, right? A bear market could last a few weeks, right? It doesn't have to be a 3-year event. However, that's all regardless. That's all kind of, aside from the point. The point is, Bitcoin is trending downwards. It's yet to make any higher highs, and even if it does, it won't look very strong unless we break 53k. 53k is the critical break for Bitcoin, and I'm not seeing the evidence I need to be seeing for that to happen. I've just mentioned a few things that I'm kind of seeing as bullish right now, but there are 10 times more things that I'm seeing as bearish, okay? And all of those things are coming from, for example, the 50 and the 200-day coming in for a death cross, right? A death cross is typically a bearish formation. Sometimes it leads to pumps, and usually what you see on a death cross actually is a short pump followed by a medium-term downwards trend. And so I wouldn't be surprised if we pump here in the next few days. But I'm not going to be betting on it. As for the Ikomoku cloud, we can see that's acting as resistance around that 45.5k region, and up here at 48k currently as well, which is bad. We've got the bull market support band as well at the same region at the Ikomoku cloud, which is at 50k roughly, and that's guarding the 53k area that we need to be breaking upwards above. Gaussian channel's doing the same thing, guarding 53k. And one of the things that's making me a bit unconfident or discouraged by entering a trade in this in this short term, this last 2 days upwards move, is because we're seeing descending volume already. All right, and usually when you see an upwards move, for example, like we saw in September, you want to be seeing a consistently rising volume. Wait, let me get this up so you guys can see it. Consistently rising volume, right, in this upwards trend. Sorry, that's blocking it. I'm not sure what to do about that. Consistently rising volume. We can see we had 4 strong green candles, and we saw rising volume in each candle as people are confidently re-entering the market consistently. What happens when you see a few green candles even on those few green candles you see descending volume, is that there's really not the emphasis on a pump, and there's really not that many bulls remaining to actually drive the price up, and people are not really willing to buy at these prices. And so when you see low volume and the price going up, it generally means that the price going up won't last. There's no direct indication as when it will end. It just means that it's not a strong move, and that there will probably enter consolidation at some point. And so I'm not confident about this move at all. And if we look at the hourly chart, it just gives us even more reason to be less, not confident at all in this move, because we're quite clearly forming an ascending triangle formation, and a lot of people won't look at this kind of stuff. which is interesting, right? Because people, they tend to cherry pick the information they look at, but that is such a clear, you can't get much clearer than that. That is a strong ascending triangle formation, ascending wedge formation. Sorry, I don't know why I get these mixed up. Ascending wedge formation, and that's not a good thing at all on Bitcoin. Ascending wedge formation typically breaks to the downside most of the time. I think it's 70 to 80% of the time it breaks to the downside. And if we take a measured move from the break, say we break to the downside on this hourly candle, which isn't going to happen, we're going to enter strongly back into this consolidation region, go to around 4,100, 41,000, sorry, and just consolidate even more until a more decisive move is made. And obviously, the more we get rejected from the upside, the more likely a downside move is going to happen. What the bulls would argue when we actually break down below this wedge, which is very likely, they'd argue that, hey, we're seeing a massive cup and handle formation, but I don't see that as the case. I see this ascending wedge formation as the clear indicator. We've seen 1, 2, 3, 4, 5 tests of the upside, 1, 2, 3 tests of the downside. It's very, very strongly instilled that that is an ascending wedge formation. And when those break bearish, you see quite quick drops, and you see them the vast majority of the time. And so that's why, even though there are some indicators on, for example, the daily chart that would recommend, or that would suggest, hey, we might be going up to 45.5k. I'm not going to bet on it, and even if we do break this ascending wedge to the upside, I think by that point it will be too late to enter the market, because you'd be entering at resistance, which you don't want to do. As for the weekly chart, we have this bullish scenario that we pointed out the other day. I don't think this is going to happen. However, this is a possibility, and this is like a scenario in which we're bouncing off the bottom support. This is a long-term ascending wedge formation that we've been forming throughout the whole year. Again, ascending wedge formations are bearish, sorry. But they do play out for an extensive period of time before they drop to the downside. And so there is the possibility of seeing one more swing to the upside. And by this kind of theory that I pointed out here, by this scenario that I pointed out, we will be reaching the top at around 72k at the 21st of March or around that period. However, I don't think that's going to happen, right? That's just a scenario that I've pointed out. There is a chance, but we really need to be seeing something stronger before that happens. If we break 53k, I would say that scenario is in play. And I would say if we break 53k, we're going to 72k. However, until we break 53k, I think we're going to be trending downwards towards this green line here, which is the 200-week SMA, and I think we're going to be reaching that in Q3 sometime. So that's July to October. July to October, sometime in that region, right? And look, we've dropped below the 50-week. We've got a lot of evidence to support that we've got a lot of resistance above. The 50 weeks at 48k. If you'll notice on the daily chart, 48k is another major resistance zone we need to be breaking, as well as something in that region. We have a massive spike on the volume profile. I think is resistance in that region. Gaussian channel, bull market support band, all in that region. 50-day, 200-day, all in that region. There's just so much to conquer, so much to be bearish about, that you'd be kind of silly to be bullish in this scenario, though. At the end of the day, this is how I see it. Okay, buying right now for a long-term position, or a medium-term position, is stupid. Okay, you'd rather wait for another. Let's see how long we have to wait. Wait for another 20% gain on Bitcoin, and then be confident that it's going to go from 53k all the way up to 72k, which is a gain of 35%. If you wait for a 20% gain, you're pretty much in a very, 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 very good position to gain 35%. Whereas if you buy now and you don't want to wait for that 20% gain, you're at risk of holding through a drop of around, well, I think it's going to go to around 25,000, right? So you're at risk of holding through a drop of almost 50%. So, the maths is pretty clear, and whether you want to use your emotions or your bias to kind of try and negate that maths is up to you. But for me, the options are very clear here, and it's quite obvious that we shouldn't be entering the market right now. Thanks for watching, guys. I hope you enjoyed, and I'll catch you in the next one.